A lot of dividend growth investors dream about building a portfolio large enough and so substantial that it outpaces and pays for their entire lifestyle, all their expenses, to where they become essentially financially free. And although there's many different ways to get there, in this video specifically, we are going to be looking into the JP Morgan Nasdaq Equity Premium Income ETF, known as JEPQ, one of the most popular income-focused cover call style ETFs across the entire market as of right now, and that's because of the larger than average starting dividend yield of around 9% or so, and also the fact that JEPQ has been an absolute machine over the last year, up 25+%. But the tricky thing is we are going to see if just $50,000 invested into JEPQ would be enough for an investor to retire completely off of. Now stick around until the end because I promise you some of these numbers are going to shock you. Drop a like down below and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first and foremost, what is JEPQ? What is the JP Morgan Nasdaq Equity Premium Income ETF? Like I sort of touched on, this is an income style, cover call style ETF that has become very, very popular over the past few years. Now it says right here in the overview on their website, seeking consistent premium income with lower volatility, which all income investors, including myself, love. It says JP Morgan Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. So the portfolio says underlying equity portfolio employs an applied data science approach to fundamental research and portfolio construction. But along with that, here's the cover call option portion of the portfolio. A disciplined option overlay implements written out the money Nasdaq 100 index call options that seek to generate distributable monthly income. So all in all, JEPQ buys a basket of holdings, writes a Nasdaq cover call option overlay alongside the holdings, generates a ton of premium which is paid in dividends, along with, depending on how the underlying trades, the ETF also has the potential to grow substantially, which, like we talked about, it has. Now, one of my personal favorite parts about investing into JEPQ, and side note, I do own hundreds of shares of JEPQ across my portfolios. I personally love the holding breakdown with JEPQ because it does offer so much exposure to technology and others. Now, because of JEPQ's exposure, it does have the potential to really move in share price over a relatively short amount of time. Even with the option overlay, which does cap some upside, this ETF has grown substantially. Now, in the max time frame since May of 2022, JEPQ is up only around 8 or 9%, but more importantly, in the last year, because of the way everything was trading, this income ETF is up substantially. Now, one of the slight negatives about JEPQ is the expense ratio at 0.35%, which is sort of industry standard for these style of ETFs, and a lot of us are used to some of these higher expense ratios, so nothing too crazy there, although it is a little bit expensive to own. But looking at JEPQ's dividends, the trailing 12-month dividend yield, so the last 12 months of dividends, is around 9.07%, which, keep in mind, volatility has been pretty low as of recently. So that's going to really affect the amount of premium that JEPQ is going to be able to earn, not to mention the dividend amount that JEPQ is going to be able to pay to the investors like you or I. But during times in the market where volatility is much steeper, like say back in 2022, you can see that this ETF has the potential to pay north of 60 cents. And keep in mind, this is a monthly distribution, which basically means that more volatility could mean bigger dividends. But all in all, for income-focused investors, I don't think any of us are really complaining about earning, say, 9% or so per year in dividends, especially when the ETF that we're holding on to is going to grow 25+% on a given year time frame. But more importantly, I know what you guys came here for. You want to see if $50,000 invested into JEPQ is going to be enough for an investor to retire later on down the line, all with just this single holding and a relatively small amount of money. Now, I get it, 50K is sort of a lot of money to invest all at once, but again, comparing it to investing hundreds of thousands of dollars into other assets throughout time, this could be a cheat code. This could be an easier way to reach the end. So with a $50,000 starting principal and a 10% initial annual dividend yield, which JEPQ's trailing 12-month right now is between 9 and 10%, a $1,200 annual contribution. So on top of the 50K, we're going to say for this scenario, an investor is going to add an extra $100 per month. A 2% expected annual dividend amount increase, which again, it's hard to say if JEPQ's dividend is going to go up or down. Again, these numbers are all going to be estimated. Take it with a grain of salt. An 8% annual share price appreciation. Again, it's very hard to know exactly how much JEPQ's price is going to go up every single year, but let's just go with 8%. 30 years invested, a dividend tax rate at 0, because for this example, we're just going to say it's in a non-taxable portfolio, a monthly distribution because of course this ETF does pay dividends monthly, and drip turned on. So all along while we're going to be reinvesting the dividends into more shares of JEPQ, which is really going to compound this portfolio most likely very quickly. So guys, I have some good news. The numbers are in. A $50,000 investment into JEPQ, going off of the numbers that we have right now, is going to earn an investor $5,200 per year in dividends. Not enough to retire off of. And side notes, I don't know exactly how much money you or I are going to need to retire off of, but I think we can all agree there's a certain number we can get behind. Year number 2, $60,000 invested now in JEPI. After the dividends are reinvested, $5,900, almost $6,000 per year in dividends. Year number 5, $101,000 and $8,400 per year in dividends. So the portfolio is growing substantially, but still not enough necessarily to live off of, not even close. So year number 10, after the $50,000 invested into JEPI and just compounding from there, we're at $216,000 and $13,200 plus per year in dividends. Now from year number 10, the numbers are going to get bigger a lot quicker because the power of compounding is really starting to kick in. And when the numbers get bigger, the other numbers get bigger. So we're at $414,000 15 years in and just over $19,000 per year in dividends. Year number 20, $741,000 and $25,000 per year in dividends. By year number 23, the portfolio will be over $1 million and $29,500 per year in dividends. Year number 30, as long as nothing changed, which again, it's hard to believe that it wouldn't, but just going off of our numbers, $2+ million and almost $40,000 per year in dividends. So this is exactly the math of what it would look like just going over the numbers that we have, and to see if we could retire early. That's going to completely depend on things like what your expenses are, how much you're looking to spend per year. But I think there's a good argument that a $50,000 investment with maybe a little bit larger annual contribution. Let's say if you added $12,000 per year, or instead of $100 per month, you added $1,000 per month to the portfolio, you can see that by year number 10, the portfolio is already at $400,000+ and $25,000 per year in dividends. So by adding a little bit more to the portfolio, you'd have a much better chance of getting to a point to where you can retire very, very comfortably, much earlier, let's say maybe in your 40s or 50s. But regardless, it is pretty impressive the numbers that JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, has put up on the board just over the past few years that this ETF has even been around in. Now for me personally, I'm very against investing only in something like this, especially if you're younger, because there's things like tax implications, and honestly, I just am obsessed with being more diversified. Buying into a lot of different stocks or ETFs is sort of the name of the game for me personally. Although we just did go over the numbers and prove that there is an argument, there is a possibility that just $50,000 invested into JEPQ longer term, and especially if you add a little bit more outside income to the portfolio on a yearly basis, there's a good chance that an everyday investor could get very, very far just going off of that. But last but not least, now I want to hear from you guys down below. When it comes to JEPQ, do you currently hold any of this one in your portfolio? And if so, how many shares do you have as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.